morning. This is George Kachuk, with RCM Wealth Advisors, reporting to you from the CME Group trading floor. Let's take a look at the equity markets this morning. Well, the equity markets continue to grind higher. We are a little bit of a cautious uptrend, and this cautiousness, as I mentioned last week, is due to the fact that we still have a number of higher volume selling days building up on the indexes. However, a lot of positive things are going on underneath the hood. Now here we are halfway through the earnings seasons, not really quite halfway, more at the start, but what I meant to say was half of the S&P 500 companies have reported thus far. And so far, earnings have come in at an increase of 6.5%, and sales had come in at an increase of 3.5%. That's really good numbers. Now, the best performing sectors have been the healthcare sectors, with that earnings coming in over 15%, and technology sector earnings have been coming in greater than 14% increase. So they're very healthy numbers. So where the S&P is right now is pretty much justified by the fundamentals of the earnings. Now, last week also on Thursday, the S&P closed a new high. Of course, we're a little bit off of that. And NASDAQ touched at its high that it made earlier July, but of course came off a little bit off of that. But what we are seeing is a lot of healthy sector rotation, meaning for the most part of this year, most of the leadership was in the energy sector, the medical sector, and semiconductors. However, last week as earnings started coming out, we saw a little bit of a shift in rotation. We're seeing the China-based stocks doing very well, retail stocks doing very well, transports continue to do well, computer stocks and apparel stocks. So there is a little bit of a healthy rotation. So even though some leaders are getting hit, others are getting very rewarded based on their earnings. Now, one of the stocks we're looking at over the last few days is Polaris. The symbol is PII. They make all-terrain vehicles, motorcycles and snowmobiles. And last week on Tuesday, they reported earnings. They came in as a surprise, had a big move to the upside. And the big surprise was that their Indian motorcycles sales grew 107% last quarter. Now that pretty much was showing that they were taking market share away from Harley. So that's pretty significant. So Polaris actually has very consistent double-digit earnings and sales growth. Over the last 3 quarters, earnings has averaged at 21%. The 3-year earnings growth rate has been at 28%, and the 3-year sales growth rate has been at 19%. They have a return of equity of 62% and pre-tax margins at about 15%. Now, why we like it? On Tuesday after they announced earnings, it broke to not a new high, but pretty much took out a pivot point at about the 144 area on huge volume, and pretty much is trading between that area. So the buy point for us is between 144 to the 151 area. We don't want to really chase it past there, and it's trading right in about that 146, 147 area this morning. Now, of course, if the trade doesn't work, if it starts falling below 140 to 137 area, you might want to scratch this trade. Either the market's not ready for the stock right now, or the market itself, maybe it's just, a little bit long in the tooth, as we've been saying a little bit, even though it grinds higher. So, as always, you're going to let price and volume be your guide. That will tell you whether your trade is working or not working. Nothing to be stubborn about. Now, for full disclosure, I do own Polaris, and accounts I manage, we do own Polaris. We are accumulating at this, and of course, consult your financial advisor. See if this trade is for you. So as always, let price and volume be your guide. This is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Good luck trading.